Hey everybody, I've had a fair few questions over our UTS online discussion board and via email, which I've reposted online, about audit opinions. So I figure it's probably a good idea to go back and do a quick review of the sorts of opinions that are available and what we use in different situations. So, what is the gold star? What is the aim of any audit? What managers want is the unqualified audit opinion. Now this is actually the reverse of what you think would be intuitive. So when you graduate from university or you complete a medical degree or you complete a qualification, you're typically classed as qualified. Right? So when you pass your CA and your CPA exams, you'll be a qualified accountant. However, in auditing, it's actually the reverse. We want an unqualified audit opinion. And that means that we believe the financial statements are free of material misstatements. Remember, we've talked about materiality before. Okay, so unqualified means free from material misstatements. So unqualified opinions are covered in ISA and ASA 700. Okay, so when we've done the audit and we believe that there are no material misstatements within the financials that haven't been adjusted, we give an unqualified audit report or an audit opinion. The majority of opinions we see on the markets fall into this unqualified situation. Now there are instances when we will need to modify the opinion. Okay, and there's three particular options for modification. You can give a qualified opinion, an adverse opinion, or a disclaimer of opinion. Now, I must clarify here that an emphasis of matter or an other matter paragraph these are not modifications in a technical auditing sense. Alright, so your options are you give an unqualified, a qualified, an adverse, or a disclaimer, and then the emphasis of matter and other matter paragraphs you can mix and match with any of these. So you could have an unqualified with emphasis of matter, unqualified on its own, qualified on its own, adverse on its own, disclaimer on its own, or a qualified adverse or disclaimer with an emphasis of matter or another matter paragraph. So what are the key differences between our modified opinions? And I'm actually going to refer here to a table that comes out of explanatory material in ASA 705. So if you're a student, I always make sure I tab this because this always gives me plenty of good information. But the standard actually says that there is a difference between qualified and adverse opinions, and we can give those qualifications or those modifications in one of two circumstances. Alright, so under qualified, option number one, you've got a material misstatement. Okay, that's also a reason for giving an adverse opinion. But what is the difference between a qualified opinion because of a material misstatement and an adverse opinion because of a material misstatement? According to the auditing standards, this is where, in the qualified situation, they use the term material but not pervasive. And then in the in the adverse opinion, it can be material, but it must be pervasive. So the key between the two is this idea, because they both have to be material, is this key about what it means to be pervasive. Okay, so what exactly does it mean to be pervasive? I like to think about pervasive like the animal that is the octopus. Alright, so imagine financial statements that are like an octopus. Octopus has 8 legs. Okay, so if I've got my financial statements, I've got my income statement, and I've got my balance sheet. Okay, and I've got all my individual lines there. Okay, so when it's pervasive, I imagine that there are material misstatements in multiple places throughout the financials. Okay, so pervasive, this is my adverse situation, multiple misstatements across multiple portions of the accounts, which means that the financial statements are difficult to interpret with these large number of misstatements. If I want it to be, or if I'm looking at a situation where it's qualified, so it's material but not pervasive, then I'm looking at a situation where I might only have 1 or 2 misstatements. So pervasive means multiple places within the financials. So we come back to here. Alright, so the key here is that it must be pervasive. So that's our first reason for going for a modified opinion, either qualified or adverse, and that's how you jump between the two. You very rarely will see an adverse opinion. The second reason why you might give a qualified opinion is that you have insufficient evidence. Alright, we know that ASA 500 says that you have to have sufficient appropriate evidence. So if the auditor cannot obtain sufficient and appropriate evidence that is material but not pervasive, I give a qualified opinion. If I have insufficient evidence that is pervasive, then I'm going to go with a disclaimer of an opinion. Alright, so a disclaimer of opinion is where I'm not actually giving an opinion. I'm saying it's impossible for me to give an opinion because I have insufficient ability to obtain appropriate evidence. So again, the difference between qualified and disclaimer is pervasive. So again, if I could only find, if I only missed out evidence on one particular part of the accounts, so that might be provisions for doubtful debts, and I've got insufficient appropriate evidence there, then I might go with a qualified opinion. If I had multiple sources where I couldn't collect information on a number of assets, a number of income items, a number of liabilities, then I would go with the disclaimer of opinion. Okay, so these, both the adverse and the disclaimer, need to be fairly serious situations, and there are examples in the explanatory material of ASA 705 for both of those. So audit opinions, 4 different options. Within those 4 different options, we can mix and match our emphasis of matter and our other matter paragraphs. Okay, so I can add an emphasis of matter to my unqualified, my qualified, my adverse, or my disclaimer. I don't have to, but I can use it if I want to draw additional attention to material within the financial statements. So make sure ISA, ASA 706, these ones here are 705. Okay, so if we go to 706, it says that emphasis of matter paragraphs are what the auditor can add to draw the user's attention for information relating to the financial statements. So if something is presented in the financial statements and you want to comment about it, a going concern, if you think that there's anything else, a subsequent event relating to the financial statements, you add an emphasis of matter. Other matter paragraphs are for disclosures relating to non-financial statement information. Okay, so anything that's important to the company but does not relate to something already existing within the financial statements comes in the other matter paragraphs, and there are some examples there in ASA 706. Now remember that the standards on subsequent events, which is ASA 560, and going concern, which is 570, both also include references to when you might need to add an emphasis of matter or an other matter paragraph. So when you would use one of these two is not simply restricted to ASA 706, also includes ASA 560 and ASA 570. So this is an example here of a composite topic where we use two topics of information, subsequent events and going concern, and also audit opinion. So make sure that you look at both of those other areas when looking at emphasis of matter or other matter paragraphs.